economists over the weekend. They're arriving home after the week in Jackson Hole, Wyoming, talking with Fed officials and listening to Fed Chairman Ben Bernanke speaking. One attendee was Richard Berner. He's the co-head of global economics and also the chief U.S. economist at Morgan Stanley, who just last week downgraded the outlook for the second half in the U.S. Thanks so much, Richard, for joining us. I know you arrived home yesterday from Jackson Hole. Your biggest takeaway from that meeting?
I'd say the biggest takeaway is that there's an enormous amount of uncertainty around the outlook. I think policymakers, not just in the U.S., but around the world, are a little nervous. But there is, Betty, a very sharp contrast between the pessimism here and the optimism in places like Asia. And I think that dichotomy reflects what we're seeing in the global economy. Strong growth in Asia, tepid growth in the developed world, especially in the United States.
Right.
And I think the pessimism here reflects not just the incoming data, but also the sense that we have some uncertainty around policy in Washington.
But Richard, is that your view or the view that you kept hearing at the meeting?
No, that's the view that I kept hearing.
Okay.
And it also underscored my view, which is that there is a lot of uncertainty around a variety of policy issues in Washington that may make people hesitate before committing to invest, to hire, or to spend.
Right, and we've been hearing that quite a bit from some of the CEOs that have come on our program, Richard. Is that also why you've downgraded the forecast for the second half, then?
Well, it's one reason, but I think there are a couple of other reasons. One is that while global growth is strong, it does look like there's going to be some slowing in the second half of this year. And we had looked to strong growth in exports to offset some of the weakness that we saw coming in the U.S.
Okay.
A second reason relates to the fact that there has been actually some fiscal restraint in the sense that the Congress did not approve the extension immediately of unemployment insurance benefits or aid to the states. That's likely to happen, but it's unclear exactly how much impact that's going to have near term. So that's another factor that is involved here. But
you actually, though, think that the second half is the worst of it, right? Because you don't see a worse 2011.
Well, we don't see a worse 2011, but it's almost, Betty, like there's a bifurcation. If we get some clarity on some of the policy issues, if, for example, Congress agrees to extend, if only temporarily, the expiring tax cuts and other provisions in the tax code before the end of this year, then I think that will be beneficial for the growth outlook for 2011. Conversely, if we see that linger into the end of the year and even go into the first part of next year, there will be a substantial amount of fiscal drag and, again, to use that word, uncertainty surrounding the outlook. So basically what I'm hearing, Richard, is, look, 2011 will likely look better, but there's a big if. And the if is the if. It is what it is, right? That's right. And you know, the context also, I don't think we should forget, we are in a period after the deepest recession in the post-war period of only talking about a modest recovery. And so whether growth is 3% next year or somewhat less than that, either way, it's not going to represent a strong recovery that's going to bring down the unemployment rate quickly, that's going to feel good to most people. Right, not quick enough for a lot of people here. Okay, Richard, appreciate you joining us. That was great. Richard Berner, the co-head of global economics at Morgan Stanley.